Good morning, and welcome to Dark Gamma's pre-market analysis. I'm Samantha. It is Tuesday, March 24th, 2026, and we are coming in just after 8 in the morning Eastern Time. The SP 500 is opening slightly in the red, sitting at 6,572, down about 9 points from yesterday's close of 6,581. That is a modest bearish gap of roughly 0.14%, so nothing dramatic, but the tone heading into the open is cautious.
That's right, Samantha. A 9-point gap down is not a panic move, but it does set up an interesting tug-of-war scenario. Max Pain today is sitting way up at 6,670, which is nearly 100 points above where we are right now. That gap between price and Max Pain is significant. It tells us that options market makers have a gravitational pull upward, and we could see that magnet effect play out as the session progresses.
Exactly, Billy. And when we layer in the expected move for today, the range Dark Gamma is marking out is 6,533 on the downside and 6,628 on the upside. So the market has roughly 47 points of breathing room in either direction. The fact that current price is sitting near the lower half of that range means bulls have room to run if they can find a catalyst.
Right. And from a gamma exposure standpoint, being below max pain like this often means dealers are in a short gamma posture in this zone, which can amplify moves in both directions. If we see buying pressure push us back towards 6,600, that gamma exposure dynamic starts to flip and can actually stabilize price action. Watch 6,533 closely. That is your downside line in the sand for today.
Now, sector data coming in this morning is notably sparse. We do not have clear leadership or a defined laggard to call out just yet. That kind of flat sector picture at the open can sometimes mean rotation is still being decided, which keeps things fluid. Traders should stay nimble and let the first 30 minutes of price action reveal where institutional money is actually flowing before committing to a directional bias.
Well said. Bottom line for the Dark Gamma community this morning. Bearish gap, but not a breakdown. Max Pain well above at 6,670 is a bullish anchor, and your expected range gives you the guardrails. The scenario favors a potential drift higher through the session if implied volatility stays contained, but respect that lower boundary near 6,533 as your risk management level.
That wraps up your Dark Gamma pre-market briefing for March 24th. Stay focused, trade the levels, and we will see how the market writes its story today. Good luck out there. Let's take a look at how the Magnificent Seven are moving in pre-market. Overall, tech is under pressure this morning, with most names trading below yesterday's close.
Nvidia is the biggest laggard today. That's significant pressure on the semiconductor side.
On the other end, Apple is holding up best relative to its peers. Relatively stronger, even if the environment is still mixed.
Tesla is always one to watch. High beta means amplified moves. A name like that can swing SP 500 futures hard at the open.
With Alphabet and Microsoft also under pressure, cloud and AI names are dragging. Watch whether these recover at the open or if selling continues.
Key message: broad tech weakness in pre-market. If the Magnificent Seven don't stabilize, SP 500 is going to feel that weight from the first minute. Before we continue with today's analysis, we have a quick message for you.
Don't go anywhere.
Want to see exactly what institutions are doing in the market in real time? Then this is for you. Exclusively for members of the Dark Gamma community, the SPX trading platform is currently in beta, and access is completely free until the official launch. Go to the link on screen, sign up, and in the discount field, enter the code shown on screen to also activate 1 free month on the institutional levels bot tool. From the platform, you will see the complete market X-ray, institutions trading live, liquidity zones, points of interest, unusual positioning, everything that moves the price of SPX visible on your screen in real time. No prior experience needed. Just get in, explore, and start seeing the market the way institutions see it, like you never have before. Take advantage of this access before it closes.
There's your invitation. I forgot to mention that both Billy and I are there with you in real time with our AI analysis of unusual positioning and other key metrics.
That's right. See you there. Now let's get into today's earnings.
This morning, the spotlight is on Smithfield Foods in the consumer defensive sector with a market cap of $9.2 billion, a low beta of 0.42, and an expected move of 2.6%, signaling a relatively calm reaction given its defensive positioning. Core and Main and Hesai Group are also reporting pre-market with expected moves of 3.4 and 5.6% respectively.
After the close today, all eyes shift to GameStop, the largest of the evening session at $10.3 billion market cap, carrying an expected move of 5.3% despite its surprisingly low beta of 0.60. AAR Corp and KB Home round out the after-hours slate with expected moves of 3.3 and 3.0%.
Looking ahead to tomorrow morning, PDD Holdings dominates at a massive $134 billion market cap with a beta of 0.81 and the widest expected move of the session at 5.8%, making it the most consequential print of the entire two-day window. Paychex and Chewy also report pre-market, with Chewy carrying a notable expected move of 8.4% despite its smaller cap.
Tomorrow evening brings Ascentage Pharma, JBS, and Carmen Holdings, though all three lack available market cap and beta data, limiting our ability to size the risk around those prints. Traders should keep gamma exposure in mind across 0 days to expiration contracts tied to PDD and GameStop, as elevated open interest near key strikes could amplify moves beyond the expected range.
The Danone acquisition of Huel is the most market-moving headline here, signaling that large consumer staples players are still willing to deploy capital into high-growth nutrition brands despite the current rate environment.
Agreed. And that kind of deal activity could give the consumer staples sector a modest lift at the open, which may provide some underlying support to the broader SP 500 if sentiment holds.
The ZEP expansion into Walmart nationwide is a quieter story, but worth watching for retail shelf space dynamics, as it puts pressure on competing cleaning brands and could nudge household products names in either direction.
With gamma exposure concentrated around key strike levels heading into the session, even small positive catalysts like these corporate developments can amplify upside moves if open interest positioning is leaning toward calls at the current range.
Looking at the SP 500 with spot sitting at 6,572, the nearest call strike worth watching is 6,600, which just exploded with an open interest change of over 2,137% overnight, adding more than 6,100 contracts in a single session. That kind of aggressive positioning right above spot suggests traders are stacking a resistance wall there that could cap any intraday rally.
On the put side, the 6,390 strike is the closest to spot and jumped nearly 897% day over day, while 6,150 surged over 1,620%, signaling fresh downside hedging being layered in rapidly below current prices. Those two strikes together build a support zone that market makers will likely defend through gamma exposure mechanics.
With max pain sitting up at 6,670, there is meaningful gravitational pull above spot, and that newly built open interest at 6,600 calls aligns almost perfectly with that level, reinforcing it as the key resistance to watch today. A failure to break through 6,600 likely keeps price pinned in a range between 6,390 and 6,600.
The put-to-call ratios across all three near-term expiries are running above 1.59, reflecting a broadly defensive options market, and with 0 days to expiration flows increasingly crowding into these nearby strikes, the intraday gamma exposure dynamic favors mean reversion rather than a trending move away from the 6,550 to 6,600 corridor.
This essentially acts like a magnet, keeping price more range-bound near current levels into the open.
On the downside, the put wall at 6,440 sits about 132 points below spot, acting as a floor where dealer put hedging creates strong buying support.
Any drift back below 6,546 flips dealers into negative gamma territory, which would amplify moves and make price action much more volatile and directional.
Watch that gamma flip level closely, because losing it on high volume 0 days to expiration flow would signal a shift toward a much more explosive tape.
Let's look at the levels where institutional players have concentrated the most liquidity. In the annual analysis, the dominant level is the 6,721 level, above current price, with maximum liquidity concentration over 27 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for SP 500.
Over the past week, the level with the highest active liquidity is the 6,715 level, above current price, with maximum liquidity concentration over 2 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.